Lululemon, the sports apparel company, is down 50% or more from all-time highs. So in this current climate we're in with the stock market, is Lululemon a good value or is it something to stay away from? We're going to go over the numbers, see if Lululemon's a good investment, and also I'll give you my 5-year price outlook on where I think Lululemon might be price-wise in 5 years from now. Stick around. What's going on, everybody? My name is Trey. This is Investing by Numbers. Welcome to the channel. Just a reminder to hit that like button if you get some good information out of this video. It helps us out so much, and I appreciate it ever so much. All right, so Lululemon. Let's check out the numbers on microtrends.net. Up here at the very top, we've got revenue numbers year over year. 2020, we had almost $4 billion in revenue, about 10% growth to $4.4 billion in 2021, up to a good, almost 50% move to 2022 with $6.2 billion, roughly a 20-25% move into 2023, and another about almost 20% move into 2024, and not too big of a move into 2025, somewhere around a 10% move, but still we're seeing great revenue growth nonetheless with Lululemon. Obviously, we are growing with revenue, and a lot of these numbers have been in the double digits, so that's great. Net income wise, definitely a profitable company. Net income wise, we've seen plenty of good growth in net income also over these years, looking like 20% in the last year. So good numbers there. I like to see the growing revenue, net income, especially in those double digit year over year growths. Let's check out their balance sheet. We've got almost $2 billion in cash on hand. Let's see how that's looking. Good cash on hand growth, kind of a little bit of a plateau there in the last few years, but recently we've hit some big growth on the cash here, and a little bit of a decline back to this number, but still growing over time nonetheless. That's what I like to see. And we have $7.6 billion in total assets, and we have almost $3.3 billion in total liabilities. So good numbers here. We have almost a double up or somewhere around 100% more total assets, total liabilities. And our cash on hand would cover more than half of our total liabilities. Obviously no long-term debt on the balance sheet, which is nice. Let's check out, let's look at the PE ratios here on what Lululemon likes to trade in. Obviously a big growth company over the last, quite a few years here. So it looks like, most of the time this thing has stayed above a 20. We got a 24 there, 26. Usually stays above a 25 PE. Kind of cycles in a healthy range between a 25 and probably a 50 here. A 50 right here. We did drop down to a 20 here. And right now we are under an 18. So as far as the historical PE ratio goes, we're looking good there. It's trading pretty cheap as far as the history of the ratios that it's traded at. And even for, 10% year-over-year revenue growth, under a 20 is still looking good. So I think, PE ratio wise, we're sitting at a really good value there. So yeah, it looks like the healthy range, I would say, trades between 25 and a 50. So 17 is looking pretty good right now. Also looking at a forward PE of even less, still under 17 here with forward PE. So looking good. Obviously in the past few quarters, the lowest we had gotten previously was around 18. So we're even looking pretty low for forward PE goes. So all these numbers, are looking great to me. When we come over here to revenue and profit with Lulu, obviously revenue quarterly growth over time looks great here for revenue, and we'll check out net income here. Same thing, we've had great quarterly net income growth over time. So this is what we like to see on a company. We want to see growing over time revenues, net incomes, and we looked at that cash in the bank as well. We want to see our companies generating more and more cash flow over time. Signs of a healthy company. Our balance sheet looks good. We're trading at a historically low PE ratio here for Lululemon. They've got really good growth, nothing insane, but I would say definitely good nonetheless. Very few quarters or years there we were seeing less than double digits, less than 10% year-over-year growth. Most everything was over 10% year-over-year. Obviously, moving forward over the next decade, those numbers will start to slow down. But I still, as far as trading at a 17, 18 PE ratio, 17 forward PE, with that style of growth, it's looking good. So let's run some other numbers and let's see what we can expect 5 years out from Lulu if it continues kind of the trajectory it's on. All right, a couple things we want to look at before we get our numbers here to make our 5-year projection. I want to come over to Yahoo Finance and look at the analysis. Obviously, let's see, we have a revenue estimate, the average estimate going up to $11.21 billion. Right now, currently for 2025, we had $10.588 billion. So in 2026, analysts expect revenue to go up 6%. And then into 2027, we're using this $12.09 billion. That's about 8%. So we'll plug in those numbers with analysts expecting 6% revenue growth for next year and then 8% the year after that. We also want to look at the net margin and kind of see what we have to expect there. Obviously, if we come here to earnings, let's see, we have more earnings growth here than the revenue growth here. As far as percentages go, there's going to be a little more of net income margin coming in there. So we are going to raise since analysts are expecting our net margin to go up a little bit, we'll go up a little higher than what it's sitting at around right now. So let's see. We have a net margin right now of around just over 17%. Obviously back here, we got up to just about 20. So let's just say that over the next 5 years, Lululemon is able to improve their net margins and we get back up to that 20% range. And let's say that we're trading around a 20% net margin there. So we've got, obviously, in the last 3 years, Lululemon has 69% revenue growth over the last 3 years, 86% net income growth. So we are seeing our net margins growing here. So that's why I along with analysts, was going to move up our net margin a little bit. Current price is $250 a share. So with this current year's revenue, we had just over $2.5 billion, and analysts expected us to go up 6% to $11.21 billion, and then 8% from there into 2027 for almost $12.1 billion. I did this wrong. Let's say that in 2028 we have another 8% growth, 8% growth going to 2029, and let's say we have 6% growth going into 2030, and we have a net margin of 20% on that $14.67 billion in revenue. And right now we've got 124 million shares outstanding, so that would give us a earnings per share in 2030 of just around $23.60. So let's say that right now, we said earlier that the current PE range for Lululemon is around 25 to 50 has been the normal range. Right now, we are down, we're at a 17. So let's say in the future at 5 years out, these are still pretty good numbers. Let's say on the low side, it trades around a 20 PE, and on the high side, let's say will kind of get up to around a 40. So fluctuation between 20 and 40. Obviously, a 20 PE would give us $472 a share, so just under a double up there. But kind of in the middle, a 30 PE would have us at $708 a share, and on the high side, a 40 PE would have us around $944 a share. So almost, somewhere around a 3x there on the high side, just under a 2x on the low side. So I think that I think for Lululemon, we've got steady growth. There's a good chance we might see more than those single-digit revenue growths that analysts expect over the next 5 years. We could end up averaging somewhere between 10 and 15% per year for the next 5 years. But I've got it right now, between around 7%. So we're kind of going in on the low side. But we could see better. Obviously, things could get worse. But I think for, looking out for Lululemon, I think those growth rates as far as revenues are going to be pretty easy to hit for them. And obviously, a net margin of 20%. Maybe it'll be a little under that, but maybe our revenue growth will be higher than we expected. But I think it's great stock. I think that they've got steady growth. They've got a good balance sheet. I'll have to be looking to see if it's something I want to add to my own stocks I'm buying list. But I'm not sure at the moment. We'll have to keep looking at it. But I hope you all found that interesting. I hope that if any of you are investing in Lululemon, that this video, was great information for you. Let me know down in the comments below. Are you buying Lululemon? Are you thinking about buying them? Comment. Anyways, y'all, thanks for tuning in. My name is Trey, and I will see y'all on the next video.